Welcome to #Fundimali. Together with WesBank, we bring you financial literacy that creates financial freedom for you today. #Fundimali brings you knowledge that you can use to make informed financial decisions when buying your dream vehicle on credit.
With regards to installment, it's the most important part of a vehicle purchase because that's the amount that you're going to be paying for years. There are 5 things which banks use to calculate your installments. And the first thing is your interest rate, your deposit, the purchase price, the term of the contract, and the last one is your contract type. Let's start with the contract type. Well, there are 3 types of contracts that you can use to purchase your vehicle on credit. The first one is installment sale. That's easy. You pay for your vehicle over the term. By the time you get to the end, you own it. The second one is balloon payment. That's when you are financing a portion of your vehicle and you are paying a lower installment. A vehicle is 100,000 Rand, so 70% is what you pay for and 30% is balloon. So that's what a balloon type of agreement is. You pay a portion of it, and the other 30% you're only liable to pay once you finish paying off the first 70%. And then we have what you call the guaranteed future value, GFV. Mostly, that's a term that people mostly use. With guaranteed future value, the bank is guaranteeing the value of the vehicle over the contract term. There are certain terms that would have been agreed at the time you take the vehicle, things like mileage and the condition of the vehicle. Through that, you pay a lower installment in terms of the GFV because, it's like a lease agreement. So make sure you understand the terms and the bank will guarantee the value of the vehicle. And then you have a deposit. This is the sum of money that you're going to contribute towards the finance deal. If the vehicle is 100,000 Rand and you put a 10,000 Rand deposit, you're no longer financing 100,000, but you're financing 90,000. What that does, it lowers your installment. A person who didn't put deposit and is financing 100,000 will pay a higher premium than a person who's put a deposit and is paying a lower installment. Then the other one is the term of the contract. It ranges from 12 to 96 months. The longer the contract, the lower your installment. The shorter the contract, the higher installment because you are paying your vehicle off in a shorter period of time. And then you have interest rate or interest that is charged on your credit. That's an additional amount which the bank charges for the credit that they're offering you when you're buying the vehicle. There are 2 types. There is fixed, which means whatever interest you get at the time you sign the contract, which makes a very big impact on your installment. That is standard throughout the contract term. 4, 7 years, you're paying the same installment. And then you have the linked interest agreement. The linked basically says if the prime lending rate goes up, then your contract interest also adjusts according to whatever difference happened. So it varies according to what the prime lending rate is. If it goes up, then your interest rate also goes up on your contract, which has an impact on your installment. If it goes down, just as good. Your installment are lowered because you're now paying a less interest on your credit. WesBank does not use race, gender, or your address to determine your interest rate because that would be discriminatory. What it uses is your credit score. The higher your credit score, the lower your interest rate because the bank would consider you to be less of a risk. Now, you'll be asking yourself, but so why do they want this information when I'm doing an application? Things like, my race and my gender. that's purely for demographic and for statistical purposes only, in terms of knowing people from this area, in terms of what applications and all that information. It's purely used for statistical purposes. It does not determine your interest rate. Now, let's just practicalize this. When you're applying for finance for a vehicle, you go to a dealership, and most people do. They go to a dealership, you fill out an offer to purchase, you're happy on the purchase price, and the dealership, in terms of the finance and insurance person at the dealership, submits your application for credit to different banks. And they come back and they give a response. And the best offer that they get is then forwarded to yourself. So which means when you look at your interest rate, you may highly find that the deal that you offered was the best that the dealer or the F&I person got when you did the application. So it's very simple. The deal that you have and an approval, you'll find that it's highly reliant on your credit score at the time, which was high or low, and that's the interest that you got based on your credit score. Race, gender, address, no. Doesn't happen. If you look at the banking sector and the finance sector as well, it's highly regulated. If you're looking at the credit application process, the National Credit Act of 2005 is the document or the act or the regulation that is used. And WesBank complies to that. All the application in terms of your affordability and the calculation of your interest is based on the processes as stipulated on the National Credit Act. So when you make an application, you make all the processes and all the applications that are received by WesBank, they are aligned to that. Nothing out of the ordinary.